Alright, what is up, guys? Hello. Welcome to IntelligenceMaxxing Day 38. This is the Tech Industry Analysis Part 1. So, I think what I'm going to do with this series is I just came back from one of the meetings that what's it called? A meeting for the Sembit Fund, which is some student-led investment fund at my school, and they were talking about the different positions that are available next year. One of them is, I guess you could call technology or IT, information technology analyst, and there's two of those. And so I think that in order for me to prepare for that position, I should probably get up to speed on the tech industry as I know it. And this is definitely something that I've been trying to do for a while now. So I want to try to do this and VF at the same time. That might be a lot of work. I'm not too sure. But I think I'm going to try this. I have about 13 days to get this in. So I'm really going to gun for it and try to make this happen. And good thing is that it's pretty close to the beginning of the semester, so hopefully it won't feel that much pressure unless classes start to pick up, and then I don't know, maybe I'll be screwed. But for now, I think this is pretty good. Let's try to make this happen. Okay, so let's take a look at Charles Schwab. They have their equity screener. Okay. Security code 161 161 3 163 123. Okay, so tech layoffs seems like it's a big thing. Shift resources away from other efforts. In some cases, increase automation in their own workforce. DocuSign said it cut 6% of its workforce. Okta, Zoom, Google, Amazon, management experts say the barrage of tech layoffs, automation. In its pharmacy business and at one medical primary care service acquired last year, Neil Lindsay, Amazon's senior vice president of health services, told workers on Tuesday that the company identify areas where we can reposition resources. Crude AI. Goals. Okay. Pandemic-fueled growth combined with low interest rates at the time sent companies on a hiring and expansion spree. Since then, borrowing money has become more expensive. PS said it would cut 12,000 jobs amid a shipping slowdown, and that those positions weren't likely to return even when businesses picked up. UPS is using machine learning to help it better determine what to charge customers for shipments, and as a result, the company's pricing department has needed fewer people. Okay, let's take a look at history of interest rates. Federal funds effective rate. Alright, so it's 5%. So, internet boom, I think it was around here. So you have a similar level of interest rates compared to the internet boom. And then you see all that crashing down. Interest rates are at 1%, and then you have back up again to 5%, and crashing down again to almost 0%. Okay. I feel like this is pretty helpful because it shows us that the tech industry before the internet boom, there was still a pretty relatively high interest rate, about the same compared to today. So I think that it's possible growth in tech could still be a big catalyst in the future. But there's also the case where to a point where they're unsustainable. Okay, and we've left ourselves with no room or for experimentation or failure, which is vital to a creative company like ours. All right. Interesting. Bluetooth and toothbrushes and GPS trackers. Snowflake. So yeah, when you think about a company that isn't profitable, I mean, MongoDB, stock. Close to an all-time high. It's up. Datadog stock. Wow, it's even more than MongoDB. Dynatrace. UiPath. Fallen since then. Klaviyo. So Klaviyo. Okay, so I think MongoDB. I'm gonna take a look at research stocks. Stock screener. So let's take a look at basic sectors and industries, consumer discretionary, so information technology, communications equipment. So there's 1,000 companies within this space. Autodesk, C3.ai, AI ML innovations. CardX, data. Datadog, is it not here? Datadog. Oh yeah, maybe it's here. DDog, okay, it is. Oh, Dropbox. Fair Isaac, I guess you could say. It's $32 billion. Maybe valuations in tech are kind of high right now. Asinus. Octa. Maybe Octa could be an interesting. Palo Alto Networks. So these are all cybersecurity related companies. Okay. We also have CrowdStrike, Fortinet. Okta. Valuation grade. Provider is an independent, neutral, cloud-based identity solution that allows customers to integrate with nearly any application. Fee forecast, EPS, book, growth metrics, 1 year sales growth, 3 year sales growth. Okay, so it seems like Okta is within so-called identity solution, cloud-based identity solution. Yes, revenue grow. Okay, why does Schwab think that it's going to sentiment grade negative, quality grade? I see. Valuation grade. What is it? Amdocs. Service-based market-leading customer experience will deliver monetized event services. Amdocs. Star. Really? Definitive economic moat, none. Okay, I'm gonna move this over here. Undervalued. It's more than offset by its weak preliminary guidance for fiscal 2025. All workforce identity cloud customers on with these emails. Target Okta's customers using phishing and social engineering tasks. Far from good luck. From Okta's perspective, as we wrote in our prior note discussing Okta's security breach, we believe the impact of this breach could extend beyond retaining existing customers. I see. Okay. So it seems like Okta had a security breach back in November 2023. Okay, although it wasn't that bad. Right. Shares marginally undervalued relative to our updated valuation due to are associated with the financial impact of the breach. Point investors seeking security exposures to fairly muddy names securities such as CrowdStrike, Palo Alto, Fortinet, and Zscaler. Why do these have no votes? Fortinet. Alright. Uncertainty, very high. Growth at a reasonable price. Okay, for 21% year over year and 24 million ahead of the high end. It's poised for long term as a leader in the identity and access management (IAM) space. Firm's workforce and customer offerings seems to grow in importance to its clients as zero trust security infrastructure as digital transformations and cloud migrations increase the company's value proposition. However, we assign Okta with a no moat rating as we don't foresee excess returns on capital in the next few years. Yet we believe the firm's platform, impressive number of integrations, and a broad range of SKUs have allowed the business to be on the cusp of generating high customer acquisition costs and a network effect. First enables company employee to securely access its cloud-based and on-premise resources. The firm's customers' offerings allows customers to securely access the client's applications such as shopping cart on a website. For Okta's products, as the shift to zero trust security infrastructure and digital transformations continue unabated. Landing larger clients. Which are often stickier than smaller ones. We also believe larger clients provide Okta with more avenues to upsell as additional resources have far greater in quantum than their smaller counterparts. Finally, we think that while Okta has made inroads with large enterprises in the U.S., the firm has attractive growth opportunities with large enterprises in the international markets. As the IAM market is expected to grow rapidly, while products targeting both customers and workforces, Okta has more than one landing point. The client's ecosystem subsequently expanded the client's spending. Okta has a big opportunity as it moves upmarket and targets larger, stickier clients. Initially, the firm has a big opportunity in the international markets. Okay. So it will likely be several years before Okta will achieve GAAP profitability. Okta's acquisition of Auth0 can be proved to be value destructive with sales integration challenges, leading to Okta not being able to extract synergies from its acquisitions. Okay, economic profits. I think that's the big thing. Net income, I see. Companies still not profitable. So identity authorization management. security. So a lot of providers. Microsoft, Entra ID, C, Cisco Duo, Okta, Workforce Identity, MongoDB Stack, Datadog, servers, bits, so Datadog, and then you also have Databricks. Datadog, Dnera, MongoDB, Snowflake, Datadog Stock, so I'll do this one on Datadog, alright, so 15, tempered by lowering of aggressive long-term growth estimates, leading to a fair value estimate remaining unchanged. On the macro front, management commentary on demand stabilization indicated that the brunt of cloud optimization, which has negatively impacted Datadog's financial, may be in the rearview mirror. As a company that operates on a consumption-based model, Datadog is susceptible to optimization as customers can decrease their spend on Datadog swiftly as they tighten their own fiscal belts. Encouragingly, Datadog saw usage trends improve sequentially in the third quarter and remained strong in the first month of the ongoing fourth quarter. Driving an exponential increase in machine data for companies to monitor and analyze. In our view, the firm's sticky product portfolio, combined with a broad range of capabilities, has helped Datadog build a narrow economic moat around its business. To be more specific, what is machine data? to become more pervasive, impacting every part of a business's operations. This increase, driven by cloud migrations and digital transformations, provide the firm with a long runway for growth. Monitoring becomes vital, from preventing server outages to triaging security threats. Okay. The firm has also augmented its organically developed technologies with acquisition. We see a big enterprise opportunity for the firm. Okay. Better business outcomes to greater IT and operations related efficiencies with impressive upselling and retention metrics, a suite of inherently sticky products offering and a long runway for growth. We believe Datadog is more likely to generate excess returns over the next 10 years and therefore merits an economic moat. Full stack and monitoring and analytics space. This is a method of unifying, coalescing disparate part of an enterprise's monitoring framework. FSMA providers seek to give enterprises a one-stop shop to monitor. Oh my god. God damn. Okay. Alright. So full stack monitoring. Let's see. Full stack monitoring. Yeah, that's where Dynatrace comes in actually. Dynatrace. Dynatrace. Datadog. (2019). Okay, also Dynatrace could also be interesting. Okay, Dynatrace. Okay, I'm going to need to use the bathroom real quick, then I'll be back. Although, one last thing, that's a bit of fun. Interesting. Okay, that's so sick. Okay. Kinda need to use the bathroom now, real quick. I'll be back.
to predict what will draw the action in.
Matt Cousin is a leading gambling reformer in the UK. He is also a recovering gambling addict.
I would say understand what the nature of these companies really is. They are big data companies that are extractive.
Zarb Cousin successfully lobbied for stricter gambling regulations in Britain, limiting how many companies advertise and how much gamblers can wager. He says the UK, where gambling's been legal for decades, offers a sobering glimpse into what he believes is a crisis.
Yeah. Interesting video on sports gambling, which is something I want to get into. Basically saying that it's bad and that people are losing their money. So yeah, that's interesting. We'll see. I probably won't delve too deep into it. Although, man, okay. Seems like my screen isn't showing up. Let me remove, okay. Then Mac OS screen capture. Okay, I think this should be good. Order, move to bottom. All right, nice. Okay. So with that, let's take a look at Dynatrace. Okay, let's Dynatrace 10K. It's not many. All right, sounds good. Let's take a look at the most recent one. So it seems like, all right, company has no debts in terms of bonds. Summary of the material risks. Okay, business. So Dynatrace offers a unified observability and security platform with analytics and automation at its core, purpose-built for dynamic hybrid multi-cloud environments. Our comprehensive solutions help global organizations simplify cloud complexity, innovate faster, and do more with less in the modern cloud. Our mission is to deliver answers and intelligent automation from data at an enormous scale, and our purpose is to enable flawless and secure digital interactions. Our vision is a world where software works perfectly. Digital transformation is ubiquitous when software defining how we bank, manufacture, deliver healthcare, educate, receive government services, transact business, and communicate with our colleagues, friends, families. This transformation is happening in particular in dynamic hybrid multi-cloud environments which bring a scale and frequency of change that is exponentially greater than that of the old data center world. So traditional approaches for developing, operating, and monitoring and securing software were not designed to keep pace with these modern cloud environments. What was once a well-understood layering of applications running on operating systems on physical servers connected to physical networks have rapidly been virtualized into software at all levels. Okay, applications are no longer monolithic and have been fragmented into thousands, potentially millions of microservices written in multiple software languages. These applications run in environments that may extend across infrastructure as a service, platform as a service, and function as a service, offered through hyperscaler vendor solutions such as Amazon Web Services, Microsoft Azure, Google Cloud Platform, and more traditional data center solutions such as mainframe environments. To monitor and secure their IT environments, organizations increasingly need to move from manual processes, static dashboards, and remediating after the fact to solutions that deliver vastly improved insights, analytics, answers, and automation. Okay. As enterprises and public sector institutions embrace modern cloud environments as the underlying foundation of their digital transformations, we believe that the scale, growing complexity, and dynamic nature of these environments are rapidly making solutions such as the Dynatrace platform mandatory instead of optional for many organizations. Combines the only fully unified end-to-end solution for comprehensive observability and continuous runtime application security, together with advanced artificial intelligence for IT operations, AI ops, to provide answers and intelligent automation from data at enormous scale. This approach enables IT development, security, and business operations team to modernize and automate operations, deliver software faster and more securely, and provide better digital experiences. We engineered the Dynatrace platform to automatically capture a wide variety of high-fidelity application, infrastructure, user experience, and open-source telemetry data at scale. With this broad set of observability, the Dynatrace platform dynamically maps all components and their dependencies in a full-stack, hybrid, multi-cloud environment for real-time continuous context. Our proprietary AI engine, Davis, processes the observability data in real time to deliver answers to issues, bottlenecks, degradations, and more. In addition, the Dynatrace platform provides extensive automation, including continuous discovery, proactive anomaly detection, and optimization across the software cycle. We believe this all-in-one approach reduces the need for a variety of disparate tools and enables our consumers to improve productivity and decision-making while reducing operating costs. Okay. So, okay, seems like it's mostly due security vendors. All right, so they're at the end of the day some type of monitoring tool. Okay. Risk factors. Rapid revenue growth. Okay. Right. I think the biggest part is probably this section. Okay. So let me also pull up VF, or not VF. I'm gonna open my Visual Studio Code, and then shoot. Okay, I'll just have this here then. Let me see if this is still running too. Okay, nice. Folder Bzang. Zang Fund. Let's do gambling. Alright. Company reports. New folder. Dynatrace. Okay. Dynatrace.qmd. Dynatrace.pymb. Alright. So let's talk about Dynatrace. So Title, Dynatrace, business, Dynatrace, automatically capture a wide variety of high fidelity. Business, Dynatrace acts as a software, as a monitoring, full stack monitoring tool for infrastructure and software. So there's also the Dynatrace platform. Provides extensive automation, including continuous discovery, proactive anomaly detection. One agent, which automatically configures itself and continuously discovers all components for consumers. An agent dynamically profiles all the components of full stack and code level precision, even as applications and environments update changes. So open telemetry, so pure path. High fidelity distributed tracing with user experience data. Oh, including open telemetry and code level analytics. Okay. So I think this enables code tracing ability. So yeah, distributed tracing.
I can still do 10.
Yeah.
But I'm going to ask you. I know you don't have class tomorrow in the morning. Oh no, you do have class.
Yeah, I did.
Any chance for 11? Because then you come back immediately, you go to sleep, perfect sleep. Because Lane has to get off at 11. I want to play with him a little bit.
Wait, get off at 11?
Lane has to get off at 11 because he has work the next day, and I want to play with him a little bit. So, would you be okay at 11?
Alright, let's just run tomorrow then.
Can't do 11?
It's okay. Go play with Lane. We can run
If
tomorrow.
not, I'll still do 10. I'd rather run.
Wait, you can't run and then play or no?
No, I get, but the thing is, then while because that takes like 30 minutes, and he's only on until 11. That's why I asked for 11.
Wait, let's just go right now then.
I just finished eating.
Alright, 9:30. You need 30 minutes to digest.
Is that okay? At 9:45?
Yeah,
Okay, I'll
9:45.
do 9:45.
It'll be quick. Like we'll take 15 minutes and then you get
It
back.
takes like 30 minutes, but you know.
No, it doesn't.
Yeah, it does.
I timed it last time.
It takes 30 minutes.
Alright, get out of here. Digest. I gotta. Wait, have you heard of Dynatrace before?
I'm pretty much a master at that.
Okay, never mind. Never
So
mind.
You just didn't believe me at all. Wow, fuck you. Okay.
It's not even
Did you
a.
say I'm so stupid?
No, it's a company, not something you master.
Yeah, I'm a master at that.
Oh, okay. Code level analysis technology. So what this means is this is just a fancy way of saying it can help trace what's caused problems within a software, within a technology system. Automatically integrates high fidelity distributed tracing with user experience data from open source technologies, including open telemetry, code level analytics. So topology, mapping, and visualization. So what is one agent? Discovers all of the components, dependencies, and application environments. Our proprietary Smartscape technology simultaneously. Oh wow, okay. So Smartscape. So one agent technology. To keep track of all components and dependencies. And Smartscape is builds an interactive map of how everything in the environment is interconnected. Development operation DevOps. AI powered answer centric insights. So technology. Okay, then we also have a Davis proprietary AI engine, dynamically baselines performance of all components in the full stack, tuning and learning to provide precise answers. Performance deviates from expected or desired. These correlation engines are aligned historical data from learning. Precise root cause determination. We believe the accuracy and precision of the answers delivered by Davis enable our customers to shift from reactive to proactive remediation, providing a substantial advantage in time savings, resource efficiency. Wow, okay, so what Q&A should I just invest? My god, Dynatrace earnings. It has doubled. open telemetry becoming the new standard of tracing, being vendor agnostic, how do we choose a backend vendor for open telemetry? For example, there are currently GCP, CloudTrace, Datadog, Dynatrace, Lightstep. What is open telemetry? A vendor neutral source. So this is open source platform that is used by all tracing companies. Okay. Continuous delivery. Dynatrace review. Huh. So it seems like there's, on Reddit in general, there seems to be some type of disparaging. Okay. Q&A AI system to help with data monitoring. So unified observability, security, and business data at any scale. So this is Grail. proprietary data lakehouse. Data lakehouse architecture. Massively parallel processing technology allows customers to analyze large volume of data, monitoring cloud data environments quickly and cost effectively without the overhead expense, limitations of storing during reindexing and rehydration posed by alternative solutions. Our automation engine enables customers to automate workflow processes through the biz, dev, sec, ops cycle, allowing them to orchestrate integrations and take actions in a production environment. This enables customers to act faster, increase development and team efficiency, reduce risk, and accomplish more with fewer resources. Our app engine provides, let's see. APIs to easily build customer applications. Our app engine provides our customer teams with a no-code, low-code tool set and programmability with application programming interfaces, APIs to build custom applications for specific use cases. Teams can collaborate in an investor with greater security and sort of biz, dev, sex, ops answer. Casual AI, causal AI for the minute. Time and performance when agent discovers and automatically updates configurations without requiring constant agent updates or application code changes. Pure path to Smartscape automatically enrich the data with full topological and dependency mapping context. Grill enables almost any kind of query in near real time. Stores data. Davis launches all the data. Context provide answers and intelligent automation. All of our product offerings leverage the Dynatrace observability and security platform to provide application and service monitoring, runtime application security infrastructure monitoring, log management, and analytics, digital experience monitoring, digital business analytics, and cloud automation in an easy-to-use, highly automated, all-in-one solution. Our approach to application performance monitoring, APM, changes how so that's what it's called. So APM, application performance monitoring. Because modern clouds are dynamic, Dynatrace instrumentation is automatic. So full stack provide visibility into distributed transactions and underlying code and entity relationships and dependencies. Dynatrace gathers metrics and telemetry beyond transaction data, including user experience, log, and event data from the latest open source standards such as OpenTelemetry. Davis, our AI engine, analyzes all data in the context of a continuously updated topology, Smartscape. The combination of capabilities allows our customers to easily manage and optimize even the most complex cloud environments with continuous observability and insights into cloud operations, software delivery pipelines, and business outcomes. VMware, Red Hat, OpenShift, Kubernetes, utilizing our one agent. So I feel like this is really dependent on cloud infrastructure and the health of maybe cloud revenues and cloud. There's probably going to be a direct correlation or maybe a positive correlation with cloud revenues and possibly cloud profits with the earnings of Dynatrace and maybe other types of application microservice monitoring, APM, performance monitoring. AWS, Azure, Google Cloud. Oh, it's GCP. I feel like a Google Cloud platform. Optimized for cloud-native applications, containers, and Kubernetes. Dynatrace application security automatically and continuously detects vulnerabilities in applications, libraries, and code at runtime. Also provides real-time detection and blocking to help prevent against injection attacks that exploit critical vulnerabilities such as Log4Shell. It removes blind spots and helps development teams more quickly determine the cause of vulnerabilities, which I believe provides organizations with confidence in the security of their applications. It's automatically and efficiently retained, serving as a single log management and analytics platform to bring IT, security, and business teams together to meet service level objectives. Topology-based dependency mapping attributes are automatically connected to log records with no required manual tagging. Dynatrace query language DQL is designed to provide instant needle in a haystack analytics to give our customers precise real-time answers across unified data and cost-efficient cloud storage with no storage re-indexing or rehydration. On-prem. Okay. So, product offerings. We really have teams like application and microservice monitoring, infrastructure monitoring, then application security, log management and analytics, digital experience monitoring, digital business analytics, cloud automation. Let's see. Oh, nice. My friend is streaming real quick. I think I might check that out. YouTube, Steve Mate. Yeah, let's go. Let's go, we made it. Hey, yo. Andre. Stream exception. Okay. Okay. I'm going to head out now, but good work. Okay, what was I gonna do? Alright, need to go back into this stuff. Alright. How's this going? Alright, nice. Alright, so cloud automation. Enable development, DevOps, and site reliability engineering teams to automate continuous integration and continuous delivery deployment. Through short feedback loops between DevOps and teams, continue release validation. So it'll help with DevOps. So DevOps, digital business analytics. APIs, feature adoption. So uses data from other sources, from I believe it's the monitoring and application and infrastructure monitoring. Leveraging Davis. Damn, I'm gassy as fuck. The Dynatrace platform utilizes big data architecture and enterprise-proven technologies that are engineered for large, complex, hybrid, multi-cloud environments. With role-based access and advanced security functionality, we built the Dynatrace platform for enterprise-wide adoption by the largest organizations in the world. Dynatrace provides out-of-the-box configuration for leading cloud platforms such as AWS, Azure, GCP, Red Hat, OpenShift, and SAP, as well as covers traditional on-premise system. Okay, so it seems like what types of in over 90 countries, okay. Competition, right. Management discussion, properties. So 60,000 in addition to our headquarters. Linz, Austria, Vienna, Poland, Barcelona, Spain. Performance graph, S&P 500, S&P 500 IT, Trace. Our Dynatrace platform combines the only fully unified end-to-end solution for comprehensive observability and continuous runtime application security, together with advanced AI ops to provide answers and intelligent automation for data at enormous scale. We take Dynatrace to market through a combination of our global direct sales team and a network of partners, including global system integrators, cloud providers such as AWS, Azure, and GCP, resellers, and technology alliance partners. We target the largest 15,000 global enterprise accounts, which generally have annual revenues in excess of 1 billion, which we believe see more value from our integrated full stack platform. Okay, so cloud platforms. So we have AWS, Azure, Google Cloud Platform, GCP, I believe Red Hat. I feel like those are the big three that I know of. And then also Red Hat, so which we define as SaaS agreements that term-based license for maintenance support agreements. How does Dynatrace business model? So to Dynatrace the market through a combination of our global direct sales team, network of partners, including global system integrators, cloud providers, which generally have annual revenues in excess of 1 billion. All of our offerings leverage the Dynatrace observability and security platform. It's primary offering we sell, recurring revenues. As of March 31st, 2023, we had approximately 555 million in cash. Increase more. Okay. Yeah, use the bathroom again. Yeah, get some food in me. I feel like I've just been drinking water. Not enough food. Oh, I got some Domino's wings I can eat after my run. Yep. Okay, so business model. It seems like the company is trying to make money from service, his subscription, cost of subscription goes into that. So about 40% of revenue goes towards sales and marketing, 20% goes towards research and development. $51,000. Yeah. Yeah, this profit growth is pretty crazy. The gross profit as a percentage of sales is also pretty crazy. Okay, dine and trace business model. Most of sales come from subscription revenues. Most of sales come from subscription revenues. So sales depend on cloud usage from customers. Their target market is large enterprise customers. So around 15,000 of them. SaaS agreements. So these are SaaS agreements. Dynatrace term base licenses. What's that? And Dynatrace perpetual licenses. Maintenance and support agreements. Majority of our customers deploy Dynatrace on a SaaS solution as a solution to get the Dynatrace features nowadays with greatly reduced administrative effort. Our SaaS solution provides customers with the ability to scale up and down rapidly without having to purchase, provision, and manage their hardware. We also provide options to deploy a platform at the edge, and custom provided provision infrastructure, which refer to as Dynatrace Managed. control of their environment, whether data programs can explicitly SaaS, their ability to adhere to data security. Premise cluster customers auto-deployment options that suit their specific enterprise management process. Environment, durability of our business model. Our annual recurring revenue ARR was $127 million as of March 31st, 2023, which reflected 25% year-over-year growth. What is annual recurring revenue? Excuse me. Metrics. So annual recurring revenue. So this is a metric used in the with companies that have a subscription type model. So this chats GPT. So what's his annual revenue? Why is the latex not formatting? ARR is a critical metric for customers times 100 text per month. Paying there. Stability. Provides insight predictable ongoing revenue streams as contrast with one-time sales of variable income, which can fluctuate. Predictable and recurring revenue components of these. Okay. This is the revenue that is earned by customers who pay monthly, quarterly, yearly, or whatever time frame subscriptions. This the revenue is annualized, so the revenue is then annualized. The annualized, so annual revenue that is earned by customers who pay. Metrics. So this metric used with companies that have a subscription type model. All right, that is earned by customers who pay. So, could this help forecast future revenues / obligations? Question mark. So, understanding past, maybe, and then forecasting the future valuation. So the rise in AI is all the buzz nowadays. And some of it hype. Some bit. AI is all the buzz nowadays, and I think that's buzz is both hype and actual utility. Okay, it's currently 9:50. Let me see if I gotta go. Daddy. Yeah. Once you're done with the bathroom, let's go run. 10 minutes? Yeah. 10 minutes?
I'm getting ready.
Yeah, yeah. that's cute.
What's good, Brian?
Hey,
How you
Richard.
been?
I've been okay. I think this week is starting to get pretty busy.
Oh yeah.
Yeah, I'm trying to apply for some type of. There's like a little club at school you have to apply for. I have to do a little application for that.
It has a beat. I mean,
Oh no, I did read.
it did?
Yeah.
Okay.
Oh.
It did.
Yeah, it did read.
Okay.
It did beat. Yeah.
Yeah, it is.
Master utility. Okay, I think I'm gonna head out now actually. I gotta go for a run real quick, so I'll be back.